Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 24th of July, and our guest, as always, on every Monday is Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, coming to us out of Singapore. Vishnu, as always, lovely to have you on the show.
It's a fabulous way to start the week, Brian. Thanks for having me.
Thank you, Vishnu. Now, for a start, disappointment across the investor community from all the activity associated with Chinese stimulus. So obviously, there's been a great expectation around stimulus coming out of China, but so far it's been very muted.
I mean, it has, and I think you hit the nail on the head. Fact is, after an underwhelming GDP print for Q2, and it's far worse than just a disappointment because if you back out the base effects, it's actually looking at a sharp slowdown. So after that, of course, we've all drummed up expectations that Beijing will unleash a bazooka type of stimulus. Beijing did announce a couple of things heading into the weekend. This has got to do with urban redevelopment or trying to get consumers to consume more with credit support marginally, whether it's in terms of household items or EVs, so on and so forth. But suffice to say that it fell well short of what markets were not just expecting, but perhaps justifiably think that's what's warranted to stir up the economy. I think the more extreme views might be that it's really flogging a dead horse here, given that these are tried and tested, but rather low rent kind of stimulus measures that would not restore confidence, the underlying confidence, the point of animal spirits, which arguably is what China needs now, given its structural impediments in terms of whether it's credit or in terms of the overhang from common prosperity, and certainly in view of the geopolitical headwinds that's also affecting the ability to revive economic growth.
But so is there an expectation then of further stimulus measures beyond all of this right now? Because obviously it seems to be rather muted, and I suppose that the numbers will tell the story next month.
It's a bit like unrequited love, isn't it? Never quite runs out of runway, so to speak. And the other thing is this: last year, the Politburo meetings had some announcement coming through at the end of July, somewhere around the 28th. So people are still hopeful that by the end of this week, there might be some of the big anchor stimulus announced, and they might connect the dots between some of the piecemeal announcements they've made. So that's the big hope. But the higher you climb, the harder you fall, and if it doesn't come through, and that would certainly undermine confidence. So this is why I think this week would be a bit precarious. Not only do you have huge central bank meetings, which of course we'll discuss later, but the fact is heading into the end of the week, you're not quite sure whether to be positioned for an enormous rally or complete letdown. So that's the binary risk that markets are looking at this week, I suppose.
Okay, one of the elephant in the room this week, obviously, is the Fed meeting in the middle of the week, Wednesday night. What's the expectation now, given the data that we've been seeing?
That's a really good question, Brian, but I think it needs precision. So the market expectation is, and there's been some build up to this, although there's some cold feet now. The initial build up was given a softer job sprint, followed by a quicker than expected disinflation in CPI and PPI headlines. Markets were getting all rallied behind one and done, meaning the July 25 basis points, just get it out of the way. It's beside the point, and that the Fed is done, and it's not just a pause, but maybe they could get into a pivot late this year. But then I think since then, some of the Fed commentary suggests that look, the work is not done. So the Fed's expectation may be that they have got more work to do, and this is why I think this FOMC meeting, what's worth saying is, people are not going to watch the walk, which is basically a 25 basis point hike. That's like a 95% chance, right? Okay. They're going to watch the talk. And specifically with the talk, they're going to watch whether September is flagged up to be a live meeting. And the bias beyond that, whether it's flagged to be a slight tightening bias, and it's for the data to convince the Fed otherwise. If the Fed puts through such a messaging, that would be a bit of a hawkish jolt. in which case you can see USD yields going higher, dollar climbing higher, which is why end of last week, you saw some retracement where the previous decline in USD yields were partly reversed. And
Sorry, Vishnu, we've lost you. Vishnu, we've lost you.
in USD yields were partly reversed. And hi, Brian. Hi,
Sorry.
Brian. I hope I'm back.
Yes, you're back again. So you were alluding to the fact that the Fed is becoming more hawkish.
Right. So I'm just saying that markets are underestimating how much hawkish runway the Fed might have left in it, or rather getting too optimistic about the fact that the Fed would call a pause much sooner than they actually might. And this is what we think might lead to an outcome where late this week you could see the dollar going slightly higher than expected, USD yields going higher. That's where some of the embedded volatility are that we need to watch out for, the disconnect between, not unlike my disconnection earlier, but the disconnect between markets and the Fed, where markets are getting ahead of themselves and thinking the Fed is done and they'll do no more. Bottom line here is that the Fed's point is the disinflation is nice, but it's not enough, whereas markets are getting very seduced by the headline disinflation.
Now, finally, as we know, there's a lot of central bank activity this week. What are events and data points that we should be watching out this week that could move markets, besides the Fed meeting, of course?
So that's a really good point, because the Fed meeting is Wednesday night when we're all asleep, or rather Thursday really early morning, 2 a.m. So when we wake up on Thursday morning, what we need to bear in mind is not just reacting to the Fed, but also positioning for any surprises the ECB might throw your way, because ECB is Thursday evening or Thursday European hours. So it's sandwiched right between the Fed and the ECB. The ECB might also sound hawkish, and this is where the FX market volatility comes in, because traders will have be in a toss-up between whether to buy the euro, sell the dollar, or buy the dollar, sell the euro. So that's where some of the volatility is. End of the week, we watch out for yen-induced volatility, because markets are expecting, or at least earlier they were expecting, there should be some adjustment to BOJ policy to make it less dovish. But Governor Weda very recently said he's not disturbed by inflation because there doesn't seem to be the so-called demand pool. So if the BOJ strikes a dovish stance, you can see more downside volatility in the yen that could drag down Asian currencies, especially if China disappointments remain in the picture. So this is why, regardless of whatever euro-dollar dynamic that goes on, we need to watch out our part of the world to see what might also affect us here.
Now, Vishnu, as always, thank you very much for your insights. Thanks for coming on the show.
Always a pleasure, Brian. Thanks for having me.
That was Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, on BizTech's Asian Midday Market Watch. This Monday, the 24th of July. I'm Brian Fernandez. This video will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.